Hey everybody, today's morning blast. It is Thursday, the 11th December, all day. Sorry. You join myself, Ryan, and Michael, obviously, who will be running through what happened yesterday in markets. Also a look ahead of today, what's been occurring, what news has been happening overnight, our thoughts, I would say our wisdom, but there's a seller's market. Before we crack on, usual warnings apply. This is recorded live. There's no editing, so there will be trigger words. People will be saying shit, fuck, or bugger. Nothing we discuss is trading or investment advice. Nothing's an endorsement unless we make it very clear that it is. So you know the situation by now. Hopefully we've put a bit of value into your day. Hopefully we put a smile on your face. Michael, how are you?
Well, very good morning to you, Ryan. Good morning, everyone. Just about alive. We've made it through FOMC day, the last Fed day of the year, and 2025 is basically over now, isn't it?
It is, mate. It is done and dusted. Pub.
Well, exactly. There you go, ladies and gents. Come back in the new year. See you later.
Oh, yeah, wouldn't that be lovely?
It really will.
Yeah. Well, what was it? So, to be honest, I wasn't really paying attention yesterday. I was too busy on other.
No change there?
No change there. But unfortunately, not in the pub. I was actually at home, busy squirreling away on PIQ related stuff. Was it the hawkish cut that you were hoping for?
Yes, and we'll explain why later on.
Cool. Awesome. Let's crack on then. Let's get Clive Lambert's update from futures text from yesterday's price action in the market. Well,
whatever it is, yeah.
Important levels, yes. Yeah. Sorry. Well, we were having a debate this morning whether or not Clive spells Marabouzi correctly, but mine isn't to wonder why. Anyway, fair bit of volatility in the overnight trade across all asset classes overnight. Equity markets responded to the Fed with gains yesterday, but in the main, these were given back with weakness overnight, with the evidence of dip buyers already responding in overnight trade. I think he must have a beer every time he says the word overnight. It's a lot of it. Bund futures posted hammer candle yesterday, hammer time. But overnight trade, oh God, there it is again, has seen a failure at Monday's Marabouzi resistance. 127.75 to 127.77 is the overnight high. God, he's getting his pound. He's getting his money's worth on the overnight button. Dollar weakened on the Fed, cable got up to 1.3389, while the euro dollar printed 1.1707 overnight. Gold is going sideways, silver is going up, making through the night. Fresh new all-time highs yesterday, and again overnight, printing 63.25 while we're all sleeping. LME copper, London copper, hasn't done anything to confirm the reversal pattern seen earlier in the week and is looking good to retest Monday's 11,771 all-time high. Oil benchmarks, Brent and WTI, both seen green yesterday, but given a chunk back so far this morning. Henry Hub. Oh, Michael dropped something. Oh, did everyone hear?
I love how you know that I've just dropped something, for fuck's sake.
But also, it's the creaking noise as your bones were kind of going, where was I?
It's my lungs that are creaking, actually.
Henry Hub, Henry Hub, nat gas over in the US tried a recovery but failed as it found sellers yesterday. TTF European gas, the benchmark over here, made yet another new low for the move late yesterday, down to 27.11, which is Marabouzi resistance in that one. An early high is 27.13. European carbon markets saw dip buyers yesterday, still eyeing 83.37, then 84.50 to 84.55. Wheat, obviously that's US wheat, broke support at 531. Soybeans, they found some buyers at support around 1,080. I don't know if it has, but I know Angie's been talking about a gap to fill. I think it was in soybeans she was talking about yesterday. So again, something what everyone loves, filling the gap. Well, that wasn't perverted. Anyway.
Most things you say are, so.
Well, quite, but very much so. But anyway, that's all from Clive on the overnight the market action. So there you go. Michael, talk to me. What's been occurring?
Yeah, well, let's start with the FOMC. Obviously, we did get a 25 basis point cut to the Fed funds rate, lowering the target range to between 3.5% and 3.75%, bang in line with expectations, also bang in line with what markets have been pricing in advance. There was another three-way split on the committee. We had two hawkish dissents to hold rates steady. They were Jeffrey Schmidt and Austin Goolsbee, with one dovish dissent for a larger 50 basis point cut. And you don't need me to tell you that came from Governor Stephen Miron. Do just bear in mind, In terms of those hawkish dissents, of course, both Schmid and Goolsby do now rotate off the FOMC because they have the regional rotation at the January meeting. So we can't really extrapolate too much in terms of the policy path from the fact that they didn't vote for a rate cut because neither of them vote again for another 3 years. In terms of the policy statement, this is where things start to get a little bit more interesting. The Fed left their economic assessment broadly unchanged. They did remove reference to unemployment remaining low, but I don't think that's probably more of a housekeeping change than trying to signal anything material. The committee, though, did tweak their forward guidance, and they now note that they will be examining, and I quote here, the extent and timing of additional adjustments to the Fed funds rate. Previously, that bit about extent and timing was not in the statement. That strongly implies that they're going to be taking a much more data-dependent approach to policy moves as we move forwards. We also, in the policy statement, had confirmation that the Fed are going to begin purchasing Treasury bills once again. For the first month, they will purchase $40 billion worth, and then they will purchase at the discretion of the New York Fed trading desk to ensure that reserves remain at an ample level. To be absolutely clear, because there's already a bull market in bad takes about this one, this is not quantitative easing. This is not the Fed trying to stimulate the US economy. This is simply the Fed conducting purchases of very, very short-term Treasury securities in order to protect the monetary policy transmission mechanism and basically ensure that funding markets in the US remain nice and liquid and continue to work as they should. There is no policy implication from this at all. If it was QE, they would be buying much further out the curve. They would be buying in much bigger quantities, and they would also be explicitly signaling that they want to bring long rates down. That is not what they are doing.
Just
it's not QE,
it's
not stealth QE, it's not soft QE, it's not any of that bollocks. And a lot of people are letting themselves down who should know better.
Just on this, it's one of those occasions that me and Michael have mentioned many times in the past, which we're both fans of, where something like this happens and people that claim to know what they're talking about and claim to, be holier than thou, the mask slips, they make very, very stupid errors, and it kind of makes them seen for what they truly are, which is blackguards.
Exactly that. In terms of the other bits and bobs that the Fed released last night, the updated SCP was pretty much unchanged from the one they issued in September, perhaps unsurprisingly so, given that we haven't really had any data since the September meeting. A marginally faster pace of GDP growth is now foreseen next year, with the economy set to grow by 2.3% in 2026. That largely reflects fiscal easing as a result of the One Big Beautiful Bill Act, but everything else in the horizon was pretty much unchanged. They still see inflation coming back down to 2% by 2028, and the median dot continues to point to one 25 basis point cut being delivered in each of 2026 and 2027. In terms of Chair Powell's post-meeting press conference, he was clearly trying to set a bit of a higher bar for further easing. I think we're probably through this phase of risk management cuts to try and support the stalling US labour market. Powell did repeat that, there is no risk-free path for policy going forwards, but he also noted that rates are now within what he called a range of plausible estimates as to where neutral might stand, while also again saying that they will make decisions on a meeting-by-meeting basis, with policy at this moment in time well positioned. Again, language very much in line with expectations, but language that really sets the bar a lot higher for the Fed to deliver another cut at the January meeting. To be clear, the direction of travel for the Fed funds rate is still lower. Powell was actually asked, is the next move potentially going to be a hike? And he said, absolutely not. A rate hike is not anyone's base case. However, the timing of that next rate reduction is going to depend on incoming data, primarily incoming labour market data. And of course, we get the October or the partial October and the full November jobs report next week. And we'll then get the December jobs report at the start of January. So the Fed will have a lot.
Oh, we lost him.
More labour market data to be looking over by the time of their next confab. No, I'm still here.
Okay.
Hello?
Yeah, no, I can hear you now.
Anyone hear me?
Out. Yes.
Oh, fine. Good. I don't know what I was saying then. But yeah, they'll have a lot more data by the end of January, by which point, obviously, they will decide whether the labour market continues to need further policy support or whether they can take more of a wait and see approach. In terms of other bits and bobs from yesterday, we also had a policy decision from the Bank of Canada. They held rates steady at 2.25% in line with expectations, while reiterating that rates are at about the right level in order to keep inflation close to the 2% target. And we've also heard from the Swiss National Bank this morning, who also maintained their policy rate at 0%, while again noting their preparedness to intervene in the FX market if necessary. Moving on from that, in terms of other bits and bobs yesterday, there's a few political things I'll cover in a moment, but the other big story is the earnings report that we had out from Oracle after the close yesterday. Oracle delivered top and bottom line beats, but some of the revenue lines were a little bit soft, particularly cloud revenue. They also raised their CapEx guidance for the next financial year from the prior of 35 billion to the current 50 billion, which I think has spooked market participants somewhat, potentially raising the prospect that they're going to have to do another debt offering as well. Oracle stock was down by about 10% after hours yesterday on the back of that, and that is why we see weakness coming through in the tech sector and in futures more broadly this morning. I would just caveat that by saying that the S&P future currently trades 68.35 on my screen. The S&P future just before the FOMC last night was trading 68.32. So it's hardly a sort of cataclysmic world-ending event that we've seen this morning. It's more a case of we had a pop over the Fed and then we've just given that back and we're back where we were. Speaking of the Fed, just going back to that a second, we heard from NEC Director Kevin Hassett yesterday, who said that Trump is going to make his final choice on the Fed chair within the next week or two. And of course, Trump has touted that a public announcement on that front will come in early 2026. And apparently he was interviewing former Fed Governor Kevin Warsh for the job yesterday. Also, though, do bear in mind, Trump said that we were going to know the name by Thanksgiving, and that was, 3 weeks ago now. So don't hang your hat on that one too much. Speaking of Trump, he was spouting his usual nonsense yesterday. He was talking about GDP growth in the United States, and he said, and I quote, "There is no reason why the US can't have 20 or 25% GDP growth per year." Well, there is. There's quite a few reasons why you can't have that, to be completely honest with you. I do think he might actually be losing it if he seriously believes that. Moving on from that, just a few headlines in the tech space before I hand back to you, Ryan, and have an inevitable coughing fit. Meta, Mark Zuckerberg, is apparently pivoting away from open source AI, whatever the hell that is. Meta are developing this avocado AI model that we mentioned the other day that they may start charging for. And apparently they've refined this new model using Qwen, which is Alibaba's AI technology. So not entirely sure.
Qwen.
No, Qwen. Qwen. So I'm not sure how that one's going to go down in the White House when they find out, but there we go. Sticking with Alibaba, Reuters sources noting that both them and ByteDance are apparently keen to be placing large orders for the H200 chips that NVIDIA are potentially now going to be able to sell to Chinese companies. Apparently Chinese tech firms are very concerned about the supply of these chips, given the limited quantities that are being produced. And also just on that note, we had, again, sources via the information overnight noting that DeepSeek, anyone remember them from January, the sort of supposedly cheaper AI that caused the market to have a little bit of a wobble at that point? Well, apparently they've been using banned NVIDIA chips in their race to build their next AI models. So again, I think at the time when that news broke, everyone was a little bit skeptical, and certainly people in the know were saying, well, they've got to be doing something slightly dodgy. Well, it's taken 11 months, but indeed they are, it would appear.
There we go. Well, Michael, thank you very much for that. Before we go back to Michael for a look ahead of today, let's get a few some of the choice headlines from the overnight news roundup. Again, I know I'll say it, but I do mean it. Do follow Zach Eisman on Twitter, and also do subscribe to our Substack to get the full list of overnight news headlines sent directly to your inbox. I'm a bit biased, but it is the best way to keep up with all the news that's happened whilst you've been dreaming about whatever your filthy lives are up to. Starting off with Oracle, obviously they tanked 10%, kills the Christmas rally vibe. Oracle shares closed more than 10% after reporting a jump in AI data and spending that isn't translating into revenue fast enough. I think we were all calling this is a potential risk for some time. Investors now wondering if the year-end rally just got cancelled. As myself and Michael said yesterday.
It didn't.
No, quite. But, people are wondering. But as Michael and myself did mention, yes, Oracle may be like a small weighting, but it can be seen as an AI bellwether, so one to keep an eye on. Obviously, we've been talking about the Fed already, but they just made rate cuts a lot harder. Fed's fractured vote signals trouble ahead. Trump wants lower rates in the new Fed chair, but Wednesday's division suggests getting one won't be guaranteed. Congress, they passed a record $901 billion with a B defense bill. The House approved a massive defense policy bill authorizing $901 billion in military spending, $8 billion more than Trump even asked for. That's 65 straight years of bills becoming law, of the defense bill becoming law. SoftBank, they drop 8% as AI spending fears spread. SoftBank shares fell as much as 8.4%, the steepest drop in weeks as Oracle's disappointing results sparked broader concerns about returns on AI infrastructure spending. Mexico, they slap 50% tariffs on China. Mexico's Senate approved tariff hikes of up to 50% on imports from China and other Asian countries. Beijing is apparently furious and demanding Mexico rectify its protectionist practices. 2 US B-52 bombers, they flew in formation with Japanese fighters over the Sea of Japan. A conspicuous display of support for Tokyo as China fumes over Taiwan comments from Japan's PM. That's been a theme for like a week or so now, the kind of situation heating up.
I was going to say, I think like we said earlier in the week, and we're no geopolitical or war experts, but
what does it
feels like? Very good. It feels like that's kind of the risk of a mistake is becoming quite high in that one.
Yeah. As we've said, was it yesterday, the day before? They've been like Chinese. They've been painting the Japanese fighters with radar, which basically means, from you remember like Top Gun, where they go, "I've got lot," and that kind of stuff. Anyway.
They didn't quite like that, but yeah,
we're definitely not experts, as you can tell. But Bank of Japan expected to hike rates next week. A strong majority of economists now expect the BOJ to raise rates by 25 basis points at its December meeting, with borrowing costs hitting at least 1% by December. The yen just hit a record low against the Chinese yuan. On this, I still think we should make 12.5 basis point moves great again. It was, solved a lot of problems, in my opinion.
Jesus.
We have had them in the past. Okay,
we have.
It was in the depths of the financial crisis when they were doing it almost daily, but that's not the point.
Well, do you know what? BOJ Governor Ueda is speaking on Christmas Day, so maybe it'll be a present for you.
Better than the lump of coal you'll get me.
I thought you were going to say the lump of coal I'm getting.
No, not at all, mate. No, I've got your Fortnum and Mason's hamper all lined up for you. Don't worry about that.
Well, it'll be, God blimey, it'll be better than the bloody cryptocurrency Christmas jumper that someone's thrown on my desk this morning. I
love it. Where was I?
I'm now covered in black wool.
Oh, I didn't know what you were going to say then.
No, move on.
Adobe's AI outlook leaves investors unimpressed. Adobe gave an upbeat annual forecast, but still got a lukewarm reaction. Investors want clearer signs that the software giant can actually thrive in an AI era, and they're not just seeing them yet, as opposed to just whapping AI on everything in the naming and stuff like that.
But it's like, we're going off on a tangent now. But do you remember pre-COVID, where I think it was 2017, 2018, when everyone just added blockchain?
Yeah, absolutely.
Like, I think the most memorable one was Kodak, the ones with the disposable cameras. They suddenly became a blockchain company. Like, what?
Yeah, no, I remember that.
And then they went bankrupt.
Funny enough, we have seen that with AI as well. And it's one of the reasons why, obviously, we're putting together, we have got PIQ pitch deck out and about. And I actually feel really cringy when I have to mention AI, because we actually genuinely use it. But I feel like almost like imposter syndrome that we actually do, because everyone's just sticking AI on there for no reason, like AI dog walking.
Or pony AI, for example.
Well, no, but they're Michael, calm down. They're legit. Well, anyway, that is an endorsement. Where was I? Vietnam banned rare earth exports. Vietnam's parliament voted to ban exports of rare earth resources, a major move that tightens control over the critical mineral deposits as the global scramble for these materials intensifies. VW considers bringing back range extender. Volkswagen is looking at offering EVs with range extender technologies in Europe and the US as the government walk back EV support and drivers keep worrying about the charging networks. Range extender technology, does this just kind of mean hybrids, so it's got a fuel tank?
Well, I was going to say, is it a fancy way of saying it's got a bigger battery? But you're probably more correct, actually.
Yeah, I think this is more hybrid, but I'm not entirely sure. American investors are quietly piling into Chinese AI stocks. Pony AI. Despite US-China tech war, American fund managers are plowing money into Chinese AI companies. The opportunity is apparently too good to pass up, according to them. The US approved $686 million for F-16 deal with Pakistan. Trump administration greenlit a $686 million sale of technology and equipment to modernize Pakistan's F-16 fighter fleet. Schneider Electronic, they announced a $3.5 billion buyback. There's Schneider Electric. I believe they make lifts and stuff, but I'm not entirely sure. It's rewarding shareholders with a buyback program of up to $3.5 billion through 2030, betting on AI and electrification to drive profits higher. Australian jobs fall most in 9 months even. Australian employment dropped by most since February, and annual jobs growth slowed sharply. Cooling labour market could ease pressure for near-term rate hike.
I was going to say, cracking timing for the RBA to turn hawkish. Right?
Exactly that, and we were only mentioning that yesterday. See, it's not just all sunshine and lollipops here. We do have a bit of value. And finally, from me, because it's a personal favourite of mine, Guinness finally opens a new London attraction. Diageo has opened its doors to its first of its new Guinness attractions in London, 2 years behind schedule, but just in time for the incoming CEO to take credit.
But they're not actually brewing Guinness there.
No, it's that's a bit, yes, irks me somewhat, because they are taking it the Guinness brewery, and my long-standing publican history, as Michael knows, there can't be an empty glass on a table that I'm at in a pub. I will take it back to the bar, to the disgruntledness of both my Clive Lambert. I swear they were drinking quickly just so I keep taking glasses back and give them a bit of time and a bit of peace.
To get rid of you.
Yeah, but anyway, that's it from me. And Zach, back to you. What's been going on, or what is going on, today?
Very good. Thank you, Ryan. In terms of today, then, the data docket is relatively light, to be completely honest with you. The only notable point comes at 1:30 this afternoon, and that is the weekly US jobless claims numbers. Initial claims in the week to the 6th of December seen having risen by 220,000. That would be quite a sharp increase from the 191,000 that we saw last time out. And of course, the prior was the lowest level since September of 2022. But do bear in mind that a lot on the sell side are saying that figure was skewed lower by the timing of Thanksgiving. And of course, claims have been hovering between sort of 210 and 230,000 for the last 6 months or so. So a print at 220 would not be out of the ordinary in any way, shape or form. Continuing jobless claims, meanwhile, for the prior week, they're expected broadly unchanged at 1.942 million compared to the 1.939 million prior. Do note, though, with that data that neither the initial nor the continuing claims print pertains to either the November or the December non-farm payroll survey weeks. And of course, we will be getting that November jobs report next Tuesday on the 16th. In terms of other bits and bobs today, we do have a 30-year bond auction in the United States, $22 billion worth being sold off. We're also due to hear from the BOE Governor, Andrew Bailey, although before you get excited, he is testifying to the COVID inquiry. So I don't think we're going to get anything particularly pertinent from him. And then just on the earnings front, after the market close, we do hear from Broadcom, of course, another one of those AI bellwethers, and the market taking a bit more of a skeptical view on that front after the Oracle numbers that we had last night. And also just a sort of final broader point, I know we mentioned this yesterday, but with the FOMC out of the way, of course, that is the final FOMC decision of the year. I do think that a lot of market participants, if they haven't already, will now be in full festive markets, year-end, close our books mode. So if you are trading, do bear in mind that conditions are likely to be considerably thinner than usual, and that will obviously only get thinner and thinner as we move through the remainder of this week and certainly into the back end of next week as well. So just a potential word of caution for anyone out there, and certainly if you haven't traded festive markets before, the one bit of advice I would give you is don't.
Yeah, very much so. One of those, unless you have to trade, why the fuck would you? No,
go to the pub, go for lunch. It's Christmas.
Exactly that, mate. Exactly that.
Although, apparently Andrew Bailey's speaking at an FT event today too, and probably more interesting to watch him at the COVID inquiry, to be honest.
Okay, I thought he was your best mate.
Well, no, I'm just slagging off the FT.
Oh, okay. Oh, got you. 10-20 apparently to Big Ryan. Big Ryan from Forksville. Obviously, I'm Little Ryan. Michael, is that you done?
It is. Yep, that's me done.
Awesome. Well, from me, from Michael, from Clive, from Zach, and thank you to everyone. We'll see you all tomorrow.